Thank you for joining me. I'm Alex, and I want to talk about Sprint because we've done T-Mobile the other day, and we've done that because they want to buy Sprint, and so I figured having a look at Sprint is going to be fairly valuable in the whole thing. Because right now you can't really buy either of the companies without considering the other one because they're kind of tied together since they made the deal to merge if possible, which looks like it is going through. So they do cell phone service just like T-Mobile. Shocking, I know. Price is currently just under $10, which gives them a market cap of $39 billion, and they were valued at 26 when the deal was made, but then again, T-Mobile was worth 64 billion and they're now worth about 100, something like that. Dividend is 0. It's going to stay there. T-Mobile also doesn't pay a dividend, and so it remains to be seen whether or not we have significantly more net income after the merger. And I assume that if they somehow fail to find something to do with their money after they have expanded as much as they can, they might be paying a dividend, but I wouldn't really count on it for the next 5 years or so. So dividend is 0, and it's irrelevant if that changes because we cannot count on that. Revenue $33.6 billion, earnings negative $1.9 billion, which is down from over $7 billion or just under, somewhere around there. So negative 130%. PE is negative 150 with forward PE of negative 41. Now, obviously, negative 150 is way better than negative 41. It's not great either way. And obviously, T-Mobile thinks that there are things that will help them more if the companies merge and everything is together. And obviously, you can save a lot in assets and personnel that if you combine the two companies, you obviously don't need to have a Sprint store and a T-Mobile store on the same corner. So there's some synergies, as people like to say, that can be had by combining the two companies that are so similar that it doesn't even really matter if you continue to use both or merge them or do whatever. So I wouldn't be too surprised if Sprint remained its own brand, but either way, there are so many things that can be saved to get the earnings back up. Obviously, a $7 billion profit would be amazing, and that would get the PE to under 6. So that really amazing things there. Total assets $84 billion, total liabilities $58 billion, which gives them a total stockholders equity of $26 billion. Now that actually is pretty decent for a balance sheet, especially for a company this small, big, whatever you want to call it. The stockholders' equity of $26 billion versus market cap of $39 billion is definitely not terrible. And so overall, I would say that I would not buy Sprint at this time. Neither as a dividend investor, obviously, nor as a growth investor, obviously, nor as a value investor, because overall, it seems like they're not in great shape right now. Obviously, some of that has to do with the merger and associated expenses. But overall, I would say that an AT&T or Verizon are way better investments right now. And you can obviously find a lot stocks that are better in pretty much every aspect than Sprint with these numbers. Now, their fiscal year ends on March 31st, so If you were to want to invest in Sprint, then I would probably wait until after they announce earnings. I would say probably late March, early April. Late April, early May, because the year ends 3/31. So other than that, I would say that everyone should probably stay away from this at this time with these numbers before the earnings for the next fiscal year come out. So that's it for me for today. If you like this video, make sure to subscribe. I'm coming out with more videos every day before market open. I hope you have a successful day.